Hello all. Our group was assigned to determine how revenue should be recognized in respect to the contract between Buildings and Development and Community Real Estate. To recognize revenue in accordance with U.S. Generally Accepted Accounting Principles, a 5-step revenue recognition process outlined in the Financial Accounting Standards Board codification should be used. Over the course of 3 years, revenue will be recognized for the completion of 4 houses for $300,000 each and 1 larger house for $1 million, which is estimated to bring $700,000 in profit.
Step 1. Identify the contract with a customer. Under guidance of ASC 606-1025-1, Step 1 states that the contract must be approved between all parties involved. The rights of the parties are identifiable. Payment terms are clear. The contract has commercial substance, and it's probable that the customer will collect the obligation. So with that said, Community Real Estate approved to have B&D construct a set number of houses at a fixed rate per house on land that they already own. B&D agreed to start on the smaller houses first, building 2 at a time and concluding with the larger house. The contract also states that B&D will acquire standard materials that are normally used to construct houses.
Step 2 in the revenue recognition model is to determine the performance obligation or obligations. To determine if there is a performance obligation, first you must consider ASC 606-10-25-14 guidance. It says that a performance obligation is a promise to transfer a customer a distinct good or service. They are identified at contract inception and determined based on contractual terms. This says that contracts may contain single or multiple performance obligations. Secondly, you must identify if the goods or services are distinct using ASC 606-10-25-19. In this case, both criteria must be met. Part A. A customer can benefit from the good or service on its own or together with other resources. Yes, in this case, the customer can benefit from the completion of each home. Part B. The transfer of goods or services to customers is separately identifiable from the other promises in the contract. For this, ASC 606-10-25-21 must be considered to help evaluate the criteria in Part B. First, does the entity provide a significant service of integrating goods that represent combined outputs? No, the houses are not integrated. Second, does one or more of the goods or services significantly modify or customize other goods or services promised in the contract? No. Third, are the goods and services highly interdependent or interrelated? No. Each house stands on its own. Therefore, the criteria in 19 is met for parts A and B, meaning that the promised good or service, which is each house, is distinct, and this also confirms that each house is a performance obligation.
So for step 3 is to determine the transaction price. And first we want to take a look at the guidance. And according to 606-10-32-2, an entity shall consider the terms of the contract and its customary business practices to determine the transaction price. The transaction price is the amount of consideration to which an entity expects to be entitled in exchange for transferring promised goods or services to a customer. 606-10-32-4 states that for the purpose of determining the transaction price, an entity shall assume that the goods or services will be transferred to the customer as promised in accordance with the existing contract. So after reading those two guidances, under ASC 606, determining the transaction price involves identifying the total amount the entity expects, which was listed in the contract, and the contract specifies a fixed total payment of $2.2 million for the construction of 5 houses. 4 of those houses are smaller houses. They cost $300,000 each, so that will do $1.2 million to create all 4 of those, and then one larger house at $1 million.
Step 4. Allocate the transaction price to performance obligations. In accordance with ASC 606-10-25-27, revenue should be recognized over time. In order for revenue to be recognized over time, one criteria listed in this section of the code must be met. The contract between Buildings and Development and Community Real Estate meets criteria B because Buildings and Development will be creating assets that Community Real Estate controls. It is important to note that there are no contingencies or discounts present to be allocated. For the allocation of the transaction price of the performance obligations, $300,000 throughout the completion of each smaller house will be recognized, and $1 million throughout the completion of the larger house.
Step 5. Recognize revenue when or as the performance obligations are satisfied. Following ASC 606-10-55-60, revenue is recognized over time. The customer can enjoy the services and benefits gradually over a period of time. And I also think that it is most appropriate to recognize on a quarterly basis. Over here we have a table laying out the amount that should be recognized at the end of each quarter. September 30th, 20x1, $0 should be recognized. In the next quarter, it's $600,000. In the next quarter, it's again $0. The next quarter, June 30th, 20x2, it's $600,000. The next quarter, $0. The following quarter, $800,000. And lastly, March 31st, 20x3, the amount recognized should be $200,000. Thank you so much for listening and for your time.